should be no such thing as a cookie cutter plan. This shouldn't be a one size fits all. We need to make sure that not only do you have the best coverage possible, that coverage is affordable as well.
This is the Biz Reveal, and I am your host, Craig Sawyer. The number one reason why people don't venture out and become self-employed is because of the rising costs to insure themselves and their family. Health insurance is becoming unaffordable and out of reach for many self-employed, small businesses, individuals, and families. While most of us recognize the need for health insurance, the current plans offered are just not fitting the majority of people's budgets. I will answer the most frequently asked questions about health insurance and simplify the health insurance conundrum. I will provide explanations for some basic elements of health insurance plans, including networks, the differences between PPO, HMO, and EPO plans, annual deductibles, co-insurance, and co-payments. I will also touch on a few benefits to a business owner providing health insurance options to your employees or independent contractors. You can visit Sawyer Health Solutions at sawyerhealthsolutions.com or contact me directly at contact@sawyerhealthsolutions.com. This is the Biz Reveal and Health Insurance Explained with Craig Sawyer. Welcome to the Biz Reveal. This is Craig Sawyer, and this week's episode, we're going to be discussing health insurance once again. We talked about health insurance back on episode 4, and sometimes it's one of those subjects where some people get what they're looking for, other people don't get what they're looking for, and there were still some answers that were left. Obviously, I only have like 30 minutes to discuss these types of things, so I wanted to take the opportunity to go a little bit deeper into the meanings of some of the terms that you'll learn when, as a business owner, you're looking at health insurance options for yourself, for your family, or possibly even looking at the opportunity to provide health coverage for your employees. And that could mean that you're either helping them pay for it, that you're paying for it in full, or maybe that you're just supplying them with some options so they can provide it for their own families. Because again, everything on the marketplace is about options. It's just about having choices. So you're not paying for things that you don't want. You're only paying for the things that you do want. And then that you also have competitive pricing. So in doing so, one of the biggest concerns I had, in fact, I was speaking with a customer this morning, and his main complaint was that when he's looking for options for health insurance, he doesn't know where to go. And then once he does find a place, he doesn't know if it's the right place. And then he also doesn't know what questions to ask, right? Because you don't know what you don't know. And he was kind of left with not knowing, like he didn't have a place to go to as far as like a person to talk to, an agent, a dedicated agent. And sometimes that's what we all need is a dedicated person that is a professional in their field that you can trust. And that's the key, is that you can actually trust them to do right by you and not just try to make a sale off of you. So that's one of the hardest parts. And it does happen in the health insurance industry, just like every other industry. There's always those few bad apples, kind of ruin it for everybody, ruin it for the industry. I do my best not to be one of those bad apples. So I have turned away a lot of business because I knew that the things that I had to offer were not in the best interest of the person I was talking to. They needed something that I could not offer them, or could not offer them as well as maybe something else that was available. So at that point, I stopped being the salesman and started being the helper and help them get to where they need to be, whether it's somebody I can refer them to directly, whether it's a website or something like that I can refer them to make sure they get the help that they need. So this morning, while helping this gentleman, one of the things that came up was he kind of knew what an HMO was, what a PPO was, but he wasn't really sure what it meant for him. Like he knew what the acronym stood for. And honestly, that's not even the important part. The important part is not necessarily what the acronyms stand for. It's what it actually does for you when you go to use it, when there's something wrong, right? When you need to go to the doctor's office or the hospital, when there's something wrong,
how does having a PPO or having an HMO or having an EPO, how does that affect you? What does it mean for you? So I had an analogy in the last episode, and I want to kind of move on from that analogy where I was using it with car insurance, basically where a PPO is kind of like your car insurance, where, you know, when you buy it, it's good in all 50 states, right? You're in network or you have coverage. You can go to any provider you want to in any state you want, just like your car insurance. And HMO is similar to buying a plan in your state, but once you leave the state line, you don't have coverage any longer, right? So can you imagine being in your car and, you know, if you live in Illinois and you drive into Indiana, now you don't have health insurance. That'd be kind of like what an HMO does. And then there's an EPO, which is even smaller. And what it does is it means that, like, if you do the equivalent of a vehicle, that once you buy that insurance in your city and you leave the city limits, you no longer have insurance on your car. That would be kind of like the equivalent in health insurance of having an EPO, where you only have just a couple doctors to choose from, and they're usually pretty close to you, but you only have maybe 4, 5, 6 doctors that you can choose from. So it's pretty limited. And another way I kind of do an analogy on that is if you look at a dartboard and the entire board would be a PPO, right? You have all the different providers that you can go to in that board. No matter where you throw your dart, you're going to hit a provider that you can go to, right? Any provider is a PPO. And then you have your triple ring, right? That ring that's not the bullseye, but the bigger ring outside of that. If you throw that dart and hits that ring, then that would be like having an HMO. So it's smaller, but you still got a pretty good group there. And then that red dot in the center, that would be kind of like hitting an EPO. All right. So if that kind of brings that into perspective as well. So EPOs are very restricted. HMOs are kind of restricted. PPOs are not restricted at all. So what does that mean for you? Well, that means that when there's something wrong, that you can go anywhere you want to go. Now, a lot of people will tell me, but hey, I'm fine with an HMO because my provider is in that HMO network. So I'm happy with that. That's great. However, the normal day-to-day doctor's visit is not the big concern, right? Your big concern is going to be that big event. For example, and I used this example on the last episode as well, is that if you had to go to a specialist for cancer and you live in Florida, but the cancer specialist that you want to go to that give you the best opportunity for surviving that cancer is in Texas, that's not going to be in your HMO network, right? It's out of state by a long shot. But this is the best opportunity for you to survive the cancer you just got diagnosed with. If you have an HMO, that's going to be out of network. And you can still go, but you won't be able to use your insurance at all, which means it's going to be tremendously unaffordable, right? Because when it comes to a cancer treatment, it's tremendously expensive if you don't have insurance. So having a PPO will allow you to go to any provider in the country you want to go to. So it's imperative that if something like that should come up, that you have the option to go to your choice of doctors. You can go anywhere you want to go. You go to that specialist that is going to give you the best opportunity of surviving the ailment that you've been diagnosed with. So that's going to be your HMO, PPO, and EPO kind of analogies, and also the what's in it for you of having one of those. Now, another option that people have some confusion about would be deductibles, your annual deductible being the biggest one. Now, that ranges quite a bit from the marketplace plans to private plans. You can range from a $0 annual deductible, maybe even an $8,150 deductible, which is pretty commonplace with the ACA plans, is to have like the bronze plan through the ACA or Obamacare Marketplace Exchange, whatever you want to call it. They're all the same. But with those types of plans, the $8,150 deductible is pretty common with the bronze plans that most people can actually somewhat afford. But it goes all the way down to a $0 deductible. And typically the $0 annual deductible, which means that the insurance company is going to start paying right away from that very first doctor's visit you go to, those are going to be the more expensive plans, right? Because that's a great benefit to have where you don't have to meet an $8,000 out-of-pocket deductible before the insurance really starts kicking in. That's gone. It's going to start paying from right away from the first one. So that's a great benefit to have. However, just like any other type of insurance, typically the better the benefits, the more the benefit payouts, the more expensive your monthly payment's going to be, right? Because you're getting all the options, you're getting all the pluses. So there are private plans available that do medical underwriting. And if you get a medically underwritten plan and you actually qualify for one because you have a pretty clean medical history, nothing major wrong, no pre-existing conditions, you don't have anything currently happening, then you can qualify for a private medically underwritten plan. And some of those will give you a $0 annual deductible, which means, again, that very first doctor's visit you go to, your insurance is paying for some of that or all of it. It depends on the situation, which is much better than having to pay for everything 100% out of pocket until you hit that $8,000 out of pocket. Here's the problem with annual deductibles, especially right now with them increasing so much through the Affordable Care Act plans, is that most of us, I believe the percentage is 94% of people do not meet their annual deductible in a year on their health insurance plan. 94%. That means only 6% of people out there are able to actually receive the benefits for their health insurance plan that they're paying all this money to get. What happens to the other 94%? Well, not a darn thing. All right. So if you have a high deductible, yes, that makes your plan a little bit more affordable monthly. But what are you paying for if you can't actually use it? Right. So look at deductibles. And if you can afford to, and you want to pay $20 a month, $30 a month more to have a lower deductible, a lot of times that's wiser because you are actually going to be able to use your insurance plan. Now, for example, you have a $0 annual deductible, which means you get first dollar benefits. That means that you can receive payment benefits from the insurance company where they're going to pay for these different visits. They're going to start paying for them from that very first one you go to, the very first one. So you do not have to come out of pocket a huge $8,000 deductible before you're actually covered. Because if you think about it this way, let's say you're a family or individual and you're paying $500 a month for your health insurance coverage. All right, so that's $6,000 a year that you're paying just to have coverage. Then if you have an $8,000 annual deductible, you also have to pay an additional $8,000 on top of that $6,000 before you can actually use your insurance. So now you're out of pocket $14,000 before you can actually receive any of the benefits from your health plan, or at least the majority of the benefits from your health plan. Or you can get a medically underwritten private plan, which is probably going to be a little bit less than what you're going to find on the ACA, right? Because it's underwritten. They're only bringing on lower risk people. Lower risk people don't have as many claims. The insurance company doesn't have to pay out so much money. Therefore, the insurance company saves money. They pass those savings along to you. So now instead of paying $500 a month, you may only be paying $400 a month. Right? So you're saving money there because now you're only paying $4,800 a year as opposed to $6,000 a year. So you have a $1,200 a year savings, plus with a $0 annual deductible, you don't have to pay that $8,000, $7,000, whatever the case is, for a deductible before you receive benefits. So not only are you saving money when it comes to the monthly premiums, you're saving money because you can actually use the health plan, right? And when you can actually use your health plan and receive benefits immediately, people tend to stay healthier because they know that it's not going to cost them a fortune to go to the doctor. Now, I mean, you may be somebody like, I have a high deductible. I'm probably not going to meet it unless something major happens, which is typically the case. So if you have a little, stomach ache or something like that you might have had for a few days, it might be serious enough to actually have to go in, but you don't because you don't want to have to pay for it. And that's the downfall to having the higher deductible plans. All right, so there's the deductible issue. You also have, the issue with the EPO, HMO, PPO. Another one is coinsurance. And what coinsurance is the percentage of your medical expenses that the insurance company will pay versus the percentage that you are responsible for paying after you meet your annual deductible. So it doesn't just stop at the annual deductible. So take, for example, let's say you have a plan with an $8,000 annual deductible, and then you have an 80-20 coinsurance up to $10,000. Let's simplify that, right? Because that's a lot of numbers, percentages. What does that mean? That means for the majority of your benefits, you have to have $8,000 out of pocket that you have to meet before the insurance company will start paying for those visits. Then once you hit that 8,000, you've satisfied your annual deductible. Now your co-insurance kicks in. They're not going to pay 100%. They're going to pay 80% and you pay 20% for the remaining $2,000 until you hit $10,000 out of pocket. Once you hit that $10,000 out of pocket total, then the insurance company picks up and they will pay for 100% of the covered items that are in that plan. So now in our scenario we gave you a minute ago, you have your $500 a month premium, right, for $6,000 a year. And then you have your $8,000 annual deductible that you have to meet. Now you're up to $14,000 a year. And then it's co-insurance of 80/20 until you're up to $10,000. So now you can add on another two. So now you've paid $16,000 in 1 year before you have 100% coverage through your health insurance plan. Now, if you can eliminate some of those extras and have a $0 annual deductible plan that pays you immediately, well, if you don't have to meet a deductible, that also can't be co-insurance, right? Because co-insurance is after you've met a deductible until you've met another certain amount that's been set. If there's no deductible to meet, there's also no co-insurance. So you don't have that 80/20. So typically how insurance companies will do that is they don't pay a percentage. They pay an allotted dollar amount that they have set towards each visit. So it may or may not be 100% of coverage. So, say for example, if you have a plan that works in that way, it's like an indemnity plan where it makes a payment towards, a set dollar amount towards a doctor's visit. If you have one of those plans, the way those would work is rather than having an immediate deductible first out of pocket and then having a co-insurance of 80/20 and then having the 100% coverage, it would work like this. They'll say maybe the insurance company pays for $75 towards a doctor's visit. Okay. First thing you're going to do is the initial charge from the doctor. It's on average, it's going to be about $150, $160. Okay. The next thing they do is they run it through the network. Depending on what network you're in, it could be anywhere from 30% to 60% of a discount, depending on what network. So they give you that network discount. Let's say you're on a network that gives you about a 50% discount. All right. So that $150 that they initially charged is now cut down to $75. That bill is what they will send to the insurance company. The insurance, as we stated in this example, the plan will pay $75 towards that doctor's visit. Well, the bill is only $75. Your insurance is going to pay up to $75. So therefore you have a $0 balance and you don't owe anything. But that can also work a different direction as well. So let's say you go to a specialist, or if you live in a city where the doctors charge just a little bit more than they do in other cities. Now the national average is about $150. Let's say you go to a doctor that charges more. They charge $250 instead of $150. The plan is still going to work exactly the same way. So in that scenario, the doctor charges $250. They run it through that network. And again, let's just say it's 50%. Now you're down to $125. The insurance company will still pay for that $75, leaving you with $50 that you would be responsible for. All right. Now that leads me to another point. So in that scenario, you only had to pay $50. Not bad, right? Could be better, but not bad. And that was in that expensive scenario. There's also another thing we had not mentioned yet was co-payments, right? We talked about annual deductibles and we talked about co-insurance, but there's also co-payments. So with co-payments, that is a charge that the doctor will charge you at the time of visit that you pay at the counter. And what a co-payment is basically you're paying a set dollar amount to see the doctor. To see the doctor. Just to see the doctor. Just to walk into their office and say, hey, doc, I got a problem. All right, so let's say that you have a $40 copay, okay, which is pretty common. It's pretty normal. If you've got a $40 copay, let's go backwards again. You're paying, let's use the same example. You're paying the $500 a month for your insurance, right? Just to have it. And then you got to pay the $8,000 out of pocket for your annual deductible. And then you have that 20% for like the 80/20 co-insurance up to $10,000 out of pocket. And then even with all of that stuff, every time you go to the doctor, you have to pay $40 every time you walk in. So these things add up. So those are the 5 things that you really want to look at first, right? So the first thing you want to look at is HMO, PPO, EPO, right? Because most importantly, is your doctor going to take the insurance? Okay. Now, if it's a PPO, you don't have to worry about it. You can go anyway, but you still want to get those in-network discounts whenever possible. But then you also want to make sure that you can afford it monthly. So that monthly premium is very, very important. You have to be sure that it fits into your monthly budget. Then you want to look at your annual deductible. How much money, in addition to your monthly premiums, do you have to come out of pocket before the insurance really starts kicking in? Then you have your co-insurance. How much more money do you have to come out of pocket after you met your deductible before you have 100% coverage? And then you have your co-payment, which is how much money you have to come out of pocket every time you walk into the doctor's office. So those are going to be the most important things that you want to look at first. All right. Very, very important to look at all those. Now, if you're a business owner and you want to provide options to your employees, or maybe you have independent contractors on board, not employees, so they have to provide their own coverage for themselves, always makes you look good. Always makes you look better if you can at least provide them with some options, right? You're not providing them with the benefit, but you can at least provide them with options to allow them more choices, more affordable choices to choose for themselves. Private plans are a great way to go for those types of situations because, again, with the medical underwriting on some of these private plans, it reduces their out-of-pocket expenses, it reduces their premiums, and it provides more and better benefits. And if you're somebody who wants to either pay 100% or pay a percentage, maybe put a stipend in their paychecks to help them pay for that coverage, that also helps you because that reduces your business expenses for those insurance benefits, right? And anywhere you can save money as a business owner is a good place to save, right? So you can look good in the eyes of your employees by providing them with benefits. It helps you out because you're getting it out of savings. And also, when you provide, some private plans will provide additional benefits in their plans that are intended for small business owners, that are intended for independent contractors. So what I mean by that is one of the benefits that some of these plans offer is that it's portable. Their coverage is portable, right? So if you have employees and you go out and get a group plan or an ACA type plan, they're tied to the employer, right? If you have a group plan, it's under the employer's name. And then you just have, like, say, your 10 employees or 20 employees or whatever the case is that kind of branch off of that one central person or central business. So if that employee were to leave, they're no longer on that plan at all because the employer is no longer their employer, and that's who owns the plan. Some of these private plans, they're individualized, right? They're not group plans. It's individual for the specific person who got it. So if somebody, an employee of yours or an independent contractor that works for your company has one of these types of plans, you're not tied to their coverage at all, which means that they ever leave the company for whatever reason, makes no difference what reason, they can completely take their insurance with them, completely intact, and take it with them. So that means that there's no gap in coverage for them. They don't lose coverage. Them and their families are still covered, which is great. Because one thing that's really bad is if you have a son or a daughter who is currently undergoing some type of treatment, and then you lose your job, and then you lose your insurance, right? That's when COBRA kicks in. That's why they have COBRA. But as most of us have experienced at least once in our lives, and if you haven't, good for you. But COBRA can be very expensive because now you're paying for 100% of that plan, and the employer's not paying for any of it. So now you really see and feel how expensive insurance plans can be. And if you had a large employer, the employer typically pays for a very large percentage of your health insurance premium. So if you're only paying for like 20% total, and you're family of 5 and you're only paying $150 every 2 weeks for your insurance, and you're only paying $300 a month for your insurance for a family of 5, that's awesome. And then you hit COBRA and realize that the actual full price of that plan was $1,300 a month because your employer is paying for $1,000 a month of that. So rather than having to go that route with the private plans that are medically underwritten and offer this particular benefit, they will allow you to keep your plan completely intact, and you just take over the payments on, and depends on how you had them paying for it anyway. Maybe they're already paying for it themselves and they just continue to do so. So for as long as those premiums are being paid, they can continue their coverage. And it's already at a discounted rate. So that's another perk as well. Another benefit to some of these plans is that they offer on and off the job coverage, right? So if you have a plan that offers on and off the job coverage, even if you're working, because a lot of folks don't realize that with health insurance plans, many of them do not protect you when you're on the clock, right? Because they rely on workers' compensation benefits for that. So, and most of us don't know this. So when you are at work and you get hurt, or if you get sick, something happens there, you can't use your own personal health insurance. You have to turn that into workers' comp. What does that mean for you as the business owner? Right? Your rates are going to go up. Workers' comp rates, they go up. So you don't want those claims. So if your employees or your independent contractors that you have on board with you happen to have a private plan that offers on and off the job coverage, that means that if they were to get hurt while on the clock, they can turn that claim in to their insurance and have it paid through their insurance, and you don't have to worry about making that claim with workers' comp, right? And some of these private plans don't increase rates based on claims. If you're lucky enough to have one of those, then that person who turned in that claim, their rates won't increase just because they had a claim. They get their great coverage that they have in their plan. Your workers' comp rates stay reasonably low because they're not going up because of claims. So a lot of benefits to that. There's a lot of benefits that the business owner has by supplying options and alternatives to their employees for health insurance purposes. You want to explore all of your options. There's a lot out there, and I'm just touching base on a couple of them. And when I'm talking one-on-one with somebody, it's much easier because we can narrow down their specific needs and what they want and what they're looking for. Well, right now, since I'm talking to a broad audience, I also have to keep the information broad, but it's so easy. Like, that is what I do. And I can narrow down exactly what it is that you're looking for by just asking a couple simple questions. One is, what's your situation right now with coverage? What do you have right now? Do you have coverage? If you do, how long have you had it? What's the deductible? How much does it run in you? What's the co-insurance? Some of those questions. It takes like a minute and a half. Once I hear some of that, then I can ask you some medical questions. Hey, any medical concerns I need to be aware of? Do you have any pre-existing conditions or current medical needs? Did you just get diagnosed with diabetes 4 months ago? Did you have a shoulder replacement done 3 weeks ago and it hasn't quite healed up yet? Did you have a shoulder replacement done 3 years ago and it has healed up yet? Right? So there's just a couple of those types of questions. So I can find out what type of plan you need. We want to make sure that the plan that you're in will take care of your specific needs, and everybody's different. There's should be no such thing as a cookie cutter plan. This shouldn't be a one size fits all, because nobody's lives are the same. Nobody's needs are the same. Nobody's medical history is the same. Nobody's financial situation is the same. So we need to make sure that not only do you have the best coverage possible, that coverage that you need is affordable as well. And sometimes that's a hard balance to get to, but we can get to that one-on-one. You just need to find the agent that will work with you and spend the time with you to get that narrowed down, because your specific situation, honestly, is all you care about. And that's all you really need to care about. If you have your own agent, great. Continue working with your own agent. If you have somebody you trust and you think they're giving you the best deals that are out there, the best plans, if they have access to all those plans and you're getting the most out of your money, stick with them. But if you think that maybe there's some other options out there that your agent does not have access to, some of these private plans, they won't have access to. Because with some of these private plans, only people who work for the companies that provide these private plans can sell those private plans. So if you have a broker who sells a lot of different plans, they won't even have access to plans like these. So make sure that you talk to a couple of different people. And that's why I have some people that I trust that offer plans that I don't offer, because if there's somebody I cannot help, I want to make sure that they can get the help they need. And that's why I make sure I send them to the correct places. So anyway, I hope that clears up a few more questions you might have had after episode 4. And I would love to get your feedback. Leave it in the comments of the YouTube video. If you guys are watching this on YouTube and you have questions, leave those questions in the comments of the YouTube video. Otherwise, you can always email us at contact@sawyerhealthsolutions.com, and I will help you out there as well. So you can always reach me directly at sawyerhealthsolutions.com. That's our website. You also go to the Contact Us page there, and you can submit your information and get a free quote. It takes me just a couple minutes to send a quote back to you. And then also you can contact me at 239-677-9877. And that's Sawyer Health Solutions. That's going to be it for this week, guys. Thank you so much for joining us here at the Biz Reveal. What we do is try to do everything we can to help the business owners and entrepreneurs in every way possible to give you guys the best chance for success. You can see us on our website at thebizreveal.com, and you can also listen to all of our past episodes there, as well as on our YouTube page. Please go to our YouTube page, subscribe, and like to see the video versions of our podcasts. And then, of course, all of your podcast apps, including Apple Podcasts and all of those other ones. Just choose your favorite one. We're going to be on all of them. Thank you so much again for joining us at the Biz Reveal. I'm Craig Sawyer. Till next time. Nobody's lives are the same. Nobody's needs are the same. Nobody's medical history is the same. Nobody's financial situation is the same. So we need to make sure that not only do you have the best coverage possible, that coverage that you need is affordable as well. And sometimes that's a hard balance to get to, but we can get to that one-on-one. You just need to find the agent that will work with you and spend the time with you to get that narrowed down, because your specific situation, honestly, is all you care about. And that's all you really need to care about. If you have your own agent, great. Continue working with your own agent. If you have somebody you trust and you think they're giving you the best deals that are out there, the best plans, if they have access to all those plans and you're getting the most out of your money, stick with them. But if you think that maybe there's some other options out there that your agent does not have access to, some of these private plans, they won't have access to. Because with some of these private plans, only people who work for the companies that provide these private plans can sell those private plans. So if you have a broker who sells a lot of different plans, they won't even have access to plans like these. So make sure that you talk to a couple of different people. And that's why I have some people that I trust that offer plans that I don't offer, because if there's somebody I cannot help, I want to make sure that they can get the help they need. And that's why I make sure I send them to the correct places. So anyway, I hope that clears up a few more questions you might have had after episode 4. And I would love to get your feedback. Leave it in the comments of the YouTube video. If you guys are watching this on YouTube and you have questions, leave those questions in the comments of the YouTube video. Otherwise, you can always email us at contact@sawyerhealthsolutions.com, and I will help you out there as well. So you can always reach me directly at sawyerhealthsolutions.com. That's our website. You also go to the Contact Us page there, and you can submit your information and get a free quote. It takes me just a couple minutes to send a quote back to you. And then also you can contact me at 239-677-9877. And that's Sawyer Health Solutions. That's going to be it for this week, guys. Thank you so much for joining us here at the Biz Reveal. What we do is try to do everything we can to help the business owners and entrepreneurs in every way possible to give you guys the best chance for success. You can see us on our website at thebizreveal.com, and you can also listen to all of our past episodes there, as well as on our YouTube page. Please go to our YouTube page, subscribe, and like to see the video versions of our podcasts. And then, of course, all of your podcast apps, including Apple Podcasts and all of those other ones. Just choose your favorite one. We're going to be on all of them. Thank you so much again for joining us at the Biz Reveal. I'm Craig Sawyer. Till next time.